Hi everyone, and thank you for tuning in. In this video, I kind of wanted to answer a curiosity I had. I've been seeing that a lot of commentary on the risk of a recession and how that could impact Disney stock because of the pullback in consumer spending. If there's a recession, obviously people are losing their jobs, their incomes are falling, and so they're going to be less interested in visiting a Disney theme park, or maybe they're going to be more interested in canceling that expensive cable subscription. And so I wanted to dig into these details and see what is the risk to Disney stock, or try to quantify it a little better than just listening to this commentary. And to answer this, I went all the way back to 2007, 2008, 2009, to the global financial crisis and that recession, because that's typically how I answer questions, right? When I see a scenario going on right now, I understand that there's probably been a time in history in the past where something like this has happened before, or something similar has happened before, and I want to see how that impacted the company before, to try and draw comparisons and try and make estimations as to what the impact could be, or the range of an impact. Not trying to get too precise because things can be very different, but just try and get a range of an estimate, right? So let's get into it. Let's look at these details here. So looking back in 2007, between 07 and 08, when the recession hit, the biggest part of Disney's business that was hit was its parks and resorts segment and the studio entertainment segment. We see those revenues decreased between 08 and 09 from 11.5 billion to 10.6 billion, a 7% decrease. And then they also fell for the studio entertainment segment by 16% from 7.3 billion to 6.1 billion. A big fall, right? And then when you look at the operating income, the segment operating income also fell dramatically in those two segments. For parks and resorts, it fell 25% year over year, and for studio entertainment, it fell 84%. Now, I did a little more digging into what happened in the studio entertainment segment. Why was the drop so severe? And I found out that this was the year where it had the biggest impact from the decline in DVD sales, DVD and Blu-ray sales. So it was right about that time that technology was transitioning into streaming, and DVD sales experienced a big pullback, and that's what management attributed the big decline in studio entertainment revenue and income. Okay, so there was a meaningful decrease in its parks revenue and in the operating income. Another question I wanted to answer was, how long did it take to bounce back? Right? Because that's something you would want to know. If there is a recession and the company's revenue and profit falls, will it snap right back, or will it take several years to bounce back? And so I looked a little bit further, and here's what I found. Revenue from 09 to 10 bounced back a little bit in the parks and resorts segment, from 10.6 to 10.7. In the media network segment, it bounced back meaningfully from 16.2 to 17.1 billion. And for the media networks, operating income rose by above where it was in 28, but up to 5.1 billion. But the parks and resorts segment was slower to recover. It kept falling, the operating income. It was 1.9 billion in 08, and it kept falling again in 2010 to 1.3 billion. So this segment was a little bit slower to recover, and that's understandable, right? That's the most expensive part of Disney's business, is a trip to a theme park or a trip to a resort. That will, depending on where the consumer is coming from, that could be $1,000 to $2,000 to $3,000 expense, and so that might be slower to come back after people have lost their jobs, after people have experienced decreases in their income. So let's look further. Now let's go 2010, 2011, and 2012, and we see the media segment continues to recover, 18.7 billion, 19.4 billion, keeps rising healthily. And the park and resort segment also jumps from 10.7, 11.8, 12.9 billion. Revenue is rising. And we see here that segment operating income now bounces higher from 1.3 billion to 1.5 to 1.9. So keep an eye out for this 1.9 billion operating income for parks and resorts, and let's compare it again to the figure before the recession. Parks and resorts operating income 1.7 billion. So it took roughly 4 years for it to recover, and then it actually surpassed 1.9 billion instead of the 1.7 billion it was here. So it took a few years to recover. It wasn't a quick snapback like like a light switch. It was more progressively rising to catch up with the previous levels before the recession. But let's note here that the great financial crisis of 07, 08, 09 was a great recession, right? It wasn't just a recession of a small magnitude. It was a large recession. Millions of people lost their jobs in this one. And so this upcoming recession may not be as severe. But another note to make is that along with those forces, if there was to be a recession, Disney is benefiting, at least Disney's theme park is benefiting from this pent-up demand from away from home experiences. So that still hasn't rebounded to the level it was before the outbreak, right? Before the outbreak, globally, we spent 1.5 trillion on travel and resort spending. After the outbreak in 2020, that fell to 610 billion. In 2021, that rose to 900 billion. But we're still roughly 600 billion below the pre-pandemic level. So there's still pent-up demand from that segment to come back. And so that could offset some of the forces from the recessionary impact. Still, that isn't to say that the impact from a recession should be minimized. As we saw, it was a meaningful several hundred million impact to its theme park segment and other parts of its business due to the recession, people losing their jobs. Overall, operating income fell from 8.4 billion down to 6.6 billion, and it took several years for it to recover, but it did, and it recovered, strongly to 9.9 billion, where it was just 8.4 billion. So it recovered above the levels it was before the recession brought it down. So Disney investors, with this risk of a recession, I would say are overestimated. The risks of the recession and the impact it could have on Disney's revenue and profits are overestimated, because even if it was to hit it, there are offsetting forces, and then looking back at its history, it recovered within a few years to levels above the pre-recession profit levels. So there you have it. Investors that were concerned about Disney's risk of recession have got a little bit of a breakdown here. It gives you an insight into what it could be, the potential impact. If you're interested if Disney's stock is a buy right now, I have a video on that I'll link to after this video is done. So if you're going to watch that video, I'll see you over there. If not, thank you for watching this one, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.